But let's move on and let's talk about general insurance. Given the kind of buzz that one has seen in the sector, the insurance premium growth, which has come in at 17% for the first half of FY20, it's important to get in the growth outlook for the sector. Remember, the stocks have managed to gain in excess of 25% in just the last two trading sessions. So what's all the excitement about? Tapan Singhel, MD and CEO at Bajaj Allianz General Insurance, joins us on the show right now. Tapas, hi, morning. Thanks for joining in on the show. The non-life insurance companies have been outperforming in the last few days with, stock prices gaining as much as over 25%. What, according to you, is aiding this kind of positive sentiment all of a sudden?
Oh, thank you. It's a pleasure being on your show. First and foremost, if you look at the non-life industry, the advantage it has is that it is still not penetrated to the level it can be, which means that as the awareness goes up, as the market gets better, you will find that the industry's penetration and the growth keeps on going up. If you look at even the past, let's say 18, 20 years, it has always had a double-digit growth, a CAGR of double-digit growth. From that perspective, the results that you see in terms of growth is something which is pretty normal. It's still good double-digit growth, and that is how I believe it will continue.
Talk about the non-life space. What is the sense that you get? A lot more avenues of growth have opened. What is happening in terms of premium trends, especially in the auto sector?
Yeah, so if in the auto sector, you see a lot of us talk about that the new car sales has dipped. But if you look at the non-life industry, it's insuring all the cars on the road. So the new cars would be contributing at about 7% to the entire premium, let us say. Out of that 7%, if there has been, let's say, a 20% drop also in terms of sales, you're just talking about 1.5% down. So which means that on a 100% basis, you're just talking about 1.5% down. So if you look at on a standalone basis, it looks pretty big that the new car sale is down 20%. But if you look at the industry, it insures all the cars, the new and the old, and the cars, which should be in the market 15 years, 20, 25 years. So you put it all together, it's not such a big impact on the industry which is there.
In terms of with the new traffic rules coming in, with the new the way it has been going, what is the sense that you get in terms of hike that has happened? Has that been absorbed by the industry?
Yeah, so if I look at the impact of traffic, which is mostly on the two-wheelers, because the two-wheelers were about 70% of them were not insured, which are on the road. On a four-wheeler basis, 80-85% already insured, and a commercial vehicle basis, about 70% vehicles already insured. So we did see a hike in the insurance of two-wheeler business happening when the fines were announced. Personally, I would like to say something here that I feel that the fines were a good step by the government, because if you look at most of the accidents on the road happens because of the carelessness in terms of driving or the rash driving which happens. I did see a huge change in the driving behavior and pattern after the fines were allowed. But as I think as the states diluted the fine, it has again lost the kind of importance that it had. So somewhere I think at a personal level, I do feel that the fines would have played a big role in terms of less road accidents, in terms of more discipline on the road, which is very critical compared to the kind of vehicle density we have vis-a-vis the infrastructure that we have currently in the market. So we did see a good spike in two-wheeler insurance, which happened when that was there. But I think after some time, about 20-25 days, it has again started dipping down. It's still better than what was earlier, but much lower than when the fines were announced.
Sure. Tell me, which are the segments then, Tapan, which are showing growth into the general insurance space, besides, of course, autos? And which segments would you say will dominate your product mix going forward?
If you look at the health segment, the awareness on health has really moved up. It is fundamentally because the cost of healthcare has been going up pretty high. And I normally tell this, and I've told this in the past also, when I was a child, if I had headache and fever, I think just a stare from my mother would correct me completely. Today, it costs about 40,000-50,000 rupees to get treated, which is good because I think people should get treated, and something early has to be detected, it should be detected. But we are realizing the importance of health, and that's why you look at the health growth is faster than the other lines of growth in the business. The other upcoming line of business I see is liability. If you look at the kind of liability claims that is coming now, and just about 10, 12 years back, Nobody thought liability would become such a big issue, but that is really moving up now. So liability is there, crop insurance is there, health is there, and auto obviously still holds its ground. It still contributes about half the business of the industry comes from auto business even now. So that is how the growth will continue moving forward.
When I look at the online space, that's catching up fast. And what is the share or the growth that you're seeing coming in from the online market?
So the online market still contributes about 3% of the industry. It is not that, no, it contributes a major portion of the industry. And online typically would be more transactional nature, which would be like automobile, and to some extent health would be online. Because for more complex insurances like the factories, or if you look at the liability insurances, so these lines of business are still being sold by the distribution mechanism which we have. See, the issue in online is that it does bring convenience, but a price difference for a customer who moves online to being serviced by a distributor, not so much. So people do value at times the role of distributor in what they're doing. So I still believe, and I still see the numbers that in India, the distribution market is still holding much strong, and it's over 95% in terms of the distribution sale which is happening.
Right. And in terms of, the online growth that you're seeing, you expect growth rates there to be high. New avenues are coming up. People are getting more comfortable, and even a lot more transparency is now increasing, or people are coming to know about, how they can read more about the same policy.
So online growth will happen with new ways of insurance happening. So if you look at mobile insurance, which is happening now, that has picked up a lot in online. If you look at travel insurance, which is happening, that also has picked up a lot in online. So fundamentally, if you look at the online business, growth is going to be created by new products, by new sachet-based products which is going to come, which is going to redefine the product and the distribution happening. So it will not be eating much into the existing lines of businesses. It may eat a bit into the auto line of business and a bit into the health. But predominantly, the online is going to create its own product and its own customer niche, and which is very exciting. I think that I already see that happening and picking up more. So that would be where the online will find its place.
Tapan, also, there are a total of 34 general insurance companies. Do you see at some point consolidation in the industry with fewer quality players left? And do you see private players gaining market share from the government players at all?
So if you look at it, I think in the first 7-8 years itself, the private players captured 40% of the market share. And today, if I look at that, close to 50% of the market share. So it is not about private or public sector. It's about good run companies with good solvency and a sustained performance in terms of delivery, in terms of customer acquisition, in terms of customer service, and also in terms of the profit that they make. So companies which do that well will sustain the market long, because insurance is not a business which you do for a couple of years. If you enter into the insurance business, you should have a horizon for at least 100 years or so, because if you look at some of the biggest insurance companies in the world today, they would be over 100 years or so of existence. It's a long-term business, and that is why if I look at this question of yours, you just see the companies which are well run. They are capturing market share, and they are also having a good share of the profits, and the customer grievance will be the lowest. The claims will be the highest. And the companies are not well run. They would have high loss ratios. They would have huge customer issues, and they'll be slowly moving out in terms of the market that they have. So this is how this is going to move forward. So as in all industries, well-run companies will have good market share, and they will sustain it for a long, long time.
Also wanted to get your views, Tapan. The government is looking to expedite the merger of 3 public insurance players to form the largest general insurance company. How is it that you're viewing this development, and how it's going to impact the overall industry dynamics?
So I think I'm not the right person to answer the question, because that is something which the government would be deciding, and the public sectors or the CEOs can answer this question much better. Because whatever I know is from the news that I read. And if I look at the news, there are times when they talk of merger, there are times when they don't talk of merger. But any loss of company from the industry's horizon is sad, because I think insurance as it is a product which people have a lot of apprehension about. A good customer service orientation has to be there. Companies have to stand, and they should do business in a manner in which they can sustain for a long point of time, is my view. It should be there.
The industry perspective, Tapan, while we have you, anything more you'd like to share with us also in terms of just growth at the company itself, outlook, for the quarter or the next couple of quarters?
Yeah, so I think those numbers you guys are already tracking for all the companies. So that is not something, but that's something which I'm very particular about is that insurance makes a huge difference to people's life. I think a lot of times people keep it on the back burner. For the cost that we spend on insurance to the benefit we have when things go wrong is huge. So the only thing I like to convey through your platform is that look at insurance and look at the insurances like at least health or your liability insurances or your home insurances at a personal level or a term insurance for yourself. It is very, very critical. I've seen so many losses. I've seen so many families get destroyed. And at times when they are not insured, I feel very sad because it does make a huge difference. I think that's the only message I would like to give because that is something I'm very passionate about.
Right. Thank you so much for joining us this morning, Tapan, with your perspective on the space. Finance Minister Sitharaman has defended the government's economic policies, reacting to